Hello everyone and welcome to Day Trader S&P 500. Today is Monday, November 28th, 2022. Hope everyone had a great holiday 4-day Thanksgiving weekend. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500. We want to get all of our YouTube subscribers up to date with what's going on in the market. And we've got some long-term things we want to check out here too. So without further ado, let's get into, we want to make sure we get this little guy going here. Okay. There we go, there we go, there we go. Like, comment, and share. Thank you guys for being a part of the channel. Okay, I'd like to start with the Qs. Want to point out here how the NASDAQ and the Qs, they're moving in Fibonacci perfection all over the place. You can see this 3 target of 280 and an actual of 280. You can see this 4 target of 313 and an actual of 314. That was a direct hit on that date target of 816, and that was a perfect Fibonacci. And we're really looking at things from this B wave high on August 16th, because we're looking at C down. You can see we've got one of C down here. But this internal wave count, this wave 2 was a perfect 50% retracement. This wave 4 was a perfect 382. This is one down, and you can see this 2 up here. The 50% retracement is 294 and it hit 293 and some fraction thereof. So it was within a point of perfection there. I think it was, anyway, it was within a point. Okay, so here we go. We've got an ABC up. Our 382 target there was 285 and the 50% was 294 and it hit 293. We're going to watch this really closely from here. You can see our other targets there where C equaled A at 289 and it equals 1.618 above at 307. So that's what we're looking at here. I want to give you guys something a little different. We haven't done this in a while, but we're going to look at the longer term chart. We're looking at a monthly log scale of the S&P Cash 500. Okay, follow along in the red Roman numerals. We've got wave 1 up, which was 5 years from 1982 to 87, and then the 87 crash for wave 2. Wave 3 up for a Fibonacci 13 years to the year 2000. And this 4, which I originally thought was 2 different corrections, but in recent years I've modified that to 1 correction, which is a 4th wave. Again, we're in the red Roman numerals, and that lasted a Fibonacci 8 plus 1 years, or the year 2000 to 2009. And then we had this, okay? So from here, we've got 1 in a circle, 1 up, 2 down, 3 up into the 2018 high, and then the expanding triangle, which we were the first to call early on in that triangle. I love expanding triangles. Anyway, we got that expanding triangle into the pandemic March 2022 low. So that was 4 with a circle, and there is 5 with a circle, okay, which completes the Roman numeral red 5. So if you follow along in Roman numerals, we've got a 1 up in red, a 2 down in red, a 3 up in red, a 4 down in red, and a 5 up in red to the 2022 high. Okay, I've got a couple different corrections on here. So if you look at the ones that go all the way over to the left here, the 382, these numbers might shock some of you, but it's 1106. And that would make sense because it would go within the 4th wave of 1 lesser degree, previous 4th wave, which is the 2000 low and the 2009, I'm sorry, the 2000 wave 3 high and the 2009 wave 4 low. So the 382 is 1106. It's in there, as you can see, okay? And then the 500 is at 703, which is right near that historic 666 low in 2009. So if the market has completed 5 waves up, again, follow in the red, then we should expect a correction down to the 4th wave of 1 lesser degree, which is, again, in there, which would be right in those 382 at 1108 and 500 at 703. So as you can see, this bear market has just begun and it has a long way to go. Okay, so I want to show you guys an alternate count, which is in blue, which labels that 2000, the year 2000 high as wave 1 up, 2009 low as wave 2 down, and then we've got a 1 in parentheses, 2 in parentheses, 3 up, 4 down, and 5 up to complete the larger wave 3. Okay, so if that's in play, then the market's going to correct the third wave up from the 2009 low to the 2022 high, and that is these smaller red lines that begin here on the left and go here, and that is 2263. Again, the fourth wave, correct to the fourth wave of 1 lesser degree, which is right there at that expanding triangle, which was the March 2020 low. That would be the most likely place for the correction to go. So let's look at the most bullish scenario in the bear market is a correction of this move up from the 2009 to the 2022 low, which happens to be a Fibonacci 13 years. Okay, and then the minimum 382 would be to 2263, which is in the area of the fourth wave of 1 lesser degree. Further corrections are the 50% at 1792 and the 618 at 1419. So we're looking at a correction of a minimum of this move up for 13 years or this move up for basically 40 years. Okay, so I wanted to give you guys a big picture because it's been a while since we covered that. And if we can look at the, again, this is the S&P cash, a monthly log. If you can look at from the all-time high in January, we have a 1 down, a 2 up, 3 down, 4 up, 5 down for wave A. We have a B up, and we're beginning wave C. 1 of C is complete. 2 of C has hit right near the 618. You can see the trend line drawn there from the all-time high to the wave B high. We're approaching that trend line. We'll see where this goes. We don't think C is over because C should at least gain equality with wave A. And in the arithmetic scale, that target is 3143. In log scale, it is 3264. And this is simply 1. This is 2. It appears complete or nearly so. Once it's complete, it'll give way to wave 3, which should be sharp and swift and a more downward degree, sharper degree of angle of ascent, a descent. Okay. Okay, that's it for that. Let's get into the ES. I don't think we need to go to any more detail. Again, the ES is the futures. S&P is very similar to the cash. I've been labeling these second wave retracements. That was a 749, that was a 588, and so far this is a 664. And this here is interesting. Let's get back at the Qs. You can see that second wave retracement from that wave 1 low is right on the 50%. And if we get back into our ESS, that is more than 50. It's more than a 618. It's a 664. And so far in the futures, that high is still on November 15th. Made a slightly lower high on the holiday weekend on Friday, the day after Thanksgiving, at 4049 and 0.75, which was just about a point less than the 4050 0.75. Okay, so we're watching this really closely, and we should be approaching wave 3 of C down anytime now in the very near future. We're watching this on a 1 and 10 minute chart. We may get into that, or at least show that in today's report. The excuse me, let me get rid of these lines here, clean it up. The move down from the B wave high has been Fibonacci perfection, not only in terms of price, but also in terms of time. You can see the internal markings here. Wave 1 was at 21 days. Wave 2 up was 1 day short of a perfect Fibonacci 8 days. Wave 3 down was within 2 days of a Fibonacci 21. Wave 4 lasted a Fibonacci 3 days. Wave 5 lasted a Fibonacci 8 days. And the entire wave 1 down from the 816 high to the October 13th low, 3502, was a Fibonacci 55 plus 3 days. And then the internal workings of wave 2 so far, Wave A was within 1 day of Fibonacci perfection. Wave B down, Fibonacci 2 days. Wave C up was within 1 day of Fibonacci 13 days. And so far, that is the high. Again, it was really close to breaking it there, but it didn't. You can see our targets here, and you can see the actual right there. Okay, 4130 is where C equals A. There's A up, B down. I've got C over here, but it just to line up with this. Okay, where is it wrong? A move above 43.27, the wave B high on August 16th, and it is wrong. Let's look at this. Okay, from that B wave low, we've been looking for a 5 up, 3 down, 5 up to complete this wave 2 and this wave C. And you can see from that B wave low, we've got a 1 up, a 2 down, a 3 up, and then 11.15, a 4 down. And I just published this earlier this morning. You can see the internal wave count of this fifth wave, and it's 1 up, 2 down, 3 up, 4 down, and 5 up. And it came within, there's that 40, 49.25 high for 5 and a 40.50.75 high for wave 3. Don't see this very often. I hardly ever call this, but wave structure is the first thing we look at, and wave structure shows if 5 waves complete unless this thing extends. So it could be a truncated fifth. That's where you get a 5 wave advance, but it does not go above the 3rd wave high. We're going to watch this really closely on a 10 to 1 minute chart to see if we have a change in trend, and we get that out to our monthly subscribers. We get reports out virtually every trading day, and sometimes more than once a day. So we've had as many as 4 or 5 in a day when the market's really moving. But that's what we're looking at there, okay? So we'll see if this 40.50 holds or if it hits one of these other targets. I believe I have maybe a pick or two for you guys here. I'll get, this is the same thing. If you guys can see that, there's that truncated fifth, or what appears at this time to be a truncated fifth. We take out this 4th wave low, that high, and this 11.3 low, and that will validate that wave count as a truncated fifth. And let's see what else we have here. I think I may have, yeah, this Fibonacci perfection in terms of price and time. This is something else. We'll see how this plays out from the 15th. But we had a turn date, I believe, before on the 14th and after on the 17th. And this thing appears to have turned right in between our Fibonacci turn dates in terms of price. So I'm going to keep tracking this even during this C wave down or this 3rd wave down once that begins. Okay, so we'll leave you guys with this. Okay, and until next time, take care, everyone.